Hello, my friend. Vitaliy Dubinin is here, founder of Financial Freedom Academy, and in this video, I want to share with you 6 lessons that we all can learn from a billionaire, Sir John Templeton. Sir John Templeton was born in 1912. He survived World War I and World War II, and when World War II started, the stock market, as you know, has completely crashed. There was a lot of fear, a lot of uncertainty, a lot of panic in the markets, and stocks just plummeted. He called his broker and instructed him to buy any stock that was trading below $1. In fact, he didn't have the money, so he convinced his ex-boss to borrow him $10,000 to buy 104 depressed stocks. The result of it, after the war has ended, these stocks has skyrocketed. And this is the first lesson that we can learn from John Templeton. Buy at a time others desperately trying to sell. You don't have often when there is a lot of fear, a lot of uncertainty in the markets. During those times is the best time to buy, and ties for perfectly the second lesson is don't be careless when big profits are coming, and don't be too cautious and extremely pessimistic when having big losses. You see, emotion is what causes a lot of losses for investors in the market. When there is a lot of profits on the table and everyone is buying, this is the time to sell, and it can be hard emotionally to click on that sell button. Conversely, when you have big losses, when the market is very down, it's very hard to click on that buy button. This is exactly what you need to do to stand for yourself and not see what everyone else is doing as part of the herd mentality, and think critically for yourself. Lesson number 3, don't be ignorant. Don't be ignorant. Know actually what it is that you are buying. Understand what you are buying. A lot of people, they are purchasing something, buying a stock, buying a crypto with very little tiny information available for them, and they don't really understand what it is that they're buying and holding. Don't make this mistake. The John Templeton Growth Fund has produced in 38 years an average annualized return of 15%, beating the S&P 500. So we can learn something from this genius investor guy who died a billionaire. Number 4, diversify broadly to protect yourself from your own fallibility, from your own mistake. Nobody is perfectly predicting what's going to happen. Not even the smartest, the brightest billionaire hedge funds in the world, they are still going to be wrong at least 30% of the time. So check your ego at the door and actually be aware of your own fallibility, of your own mistakes. And that ties to this diversification principle. You gotta diversify across different markets, across different sectors, across different times period, across different industries. Number 5, successful investing requires patience. This is crucial, right? When he bought those depressed stocks in World War II, he didn't know when the war is going to end, how much time it's going to take. It requires a lot of patience and self-control. Big other investors like Warren Buffett also have extreme level of patience. They sometimes can go for months or even a year without making a single investment because it doesn't satisfy their personal criteria. And number 6, don't chase fads. Okay? Fads are coming and everybody's like, this is the best thing to invest in. For example, in 2020, 20 and 21 mania of NFTs. There was a huge fad about NFTs, buying those collections, and price skyrocketed. Valuations were unreal. Millions of dollars for some little NFT collection of Bored Ape Yacht Club has skyrocketed. And then what happened next? The Fed stopped and the prices went down to earth and absolutely plummeted. So these are the 6 things that we can learn from John Templeton. I hope that you took a lot of value from this video. If you want to learn how to become financially free, what is that roadmap to financial freedom, that I'm looking forward to welcome you inside my community. Subscribe to the Financial Freedom Academy, and I'm gonna see you in the next videos.